Hi guys, it's Stock Curry and welcome back to the channel. I just got back from vacation and man, it was wonderful. I was out storm chasing, went all over the place. Colorado, Kansas, Oklahoma, Texas, New Mexico. I traveled all over. And it was wonderful. Unfortunately, did not see any tornadoes this time around, but I'm not giving up. I might head out another weekend. But I got to tell you, one of the things that I love about investing in the stock market, and especially trading, is I left on vacation. I got back and I had more money in my account than when I left. I actually made money on vacation. It was wonderful. So that's one thing I just love about trading in the stock market is you can actually make money while you're sleeping. You can make money on vacation. It's just, I love investing. For real fast, just a quick reminder. The markets are closed on Monday. It is a holiday in the United States on Monday, so the markets do not reopen until Tuesday. And what I want to do today is I'm going to give you guys a market update. I'm going to give you a recap of last week as well as what's going on for this coming week and really for the entire month of June. I just want to give you an idea of what to look forward to in June. The other thing is I'm going to be doing the stock picks Tuesday morning. So I'm splitting this up into two videos just because of the length and the amount of information that I have to give you guys. So market update right now and then stock picks Tuesday morning before the market opens. Okay, let's talk about last week. So last week is a little bit surprising. The inflation numbers did in fact come in higher than expected. They did in fact come in hotter than expected, and yet the market went up. This is typical for a correction though. A lot of times what happens during corrections is we'll see the stock market go down for about 2 or 3 weeks, and then it goes up for a week, and then down for 2 or 3 weeks, and up for a week or two, then down. We saw that all through 2008. We've seen this in other prior corrections. The only time I didn't see it was March of 2020, which is just a complete anomaly. But normally we see very slow corrections that last months, and they don't just go down in a straight line. They zigzag. They go down, they go up a little, down, up a little, down. And so that's what I think happened last week. I think it was just a little bit of a rebound, a little bit of a dead cat bounce before we start going back down some more. So we'll have to wait and see. Now, there are some analysts, there are some people that think we were only going to get a 4 to 6% downward before we start going back up to new all-time highs. They think we're not going to get a correction until the Fed starts to raise interest rates or cut back on their bond buying or something like that. So it's possible that I'm wrong. We're not in a correction. And in fact, we're going to start going back up to new all-time highs. I think this week will actually tell us for sure what's going to happen. If the NASDAQ especially reaches new all-time highs, then we're set to just take off. If we do continue to go down this week, then I think we are in fact in a correction. But I think this week is going to be key to let us know what's actually happening. Now, June overall is historically a bad month in the stock market. The Dow is down 60% of the time in the month of June, averaging a loss of 0.7%. So I'm not having a lot of high hopes for June here. We've seen this go down a lot. And the fact that we've already, in my mind, started a correction, I do believe that June is going to be another bad month. A little bit closer term, let's specifically talk about this coming week. The big catalyst for this week is going to be the jobs report on Friday. Now, this is the May jobs report that's coming out on Friday. If you guys remember last month, the April jobs report number came out and it was absolutely dismal. In fact, it's what kickstarted this entire correction. They were expecting about 600,000 jobs and we ended up getting like 200,000. It was horrible. And so all eyes are going to be on Friday to find out what the May jobs report number says. If it's bad again, we can expect stocks to really go down. However, if it's good, then I think the markets are just going to see the April jobs report as sort of a blip on the radar, and we're just going to keep going. So I don't know. We'll have to see. But Friday is going to be a very important day in the market. Now, there are a couple of precursors leading up to the Friday jobs report. And these can give us a little bit of an insight as to what the Friday jobs report might do and what it might look like. The first precursor is the ADT employment numbers that are coming out on Wednesday. And the ADT reports how many employees basically they have on their payroll. So we will get a little bit of an idea as to what might happen on Friday from the ADT employment numbers. And then on Thursday, we get the initial jobless claims. And the initial jobless claims, if they're high, might be a sign that the employment numbers on Friday are going to be low. If the initial jobless claims are low, that could be a sign that the employment numbers on Friday are going to be high. And so we'll have to see on Wednesday and Thursday as sort of precursors, but really Friday is going to be the big market mover. A little bit later in the month, around mid-June, the Fed is meeting on June 15th and 16th. And all eyes are going to be on the Fed because we need to see how they're going to respond to that high inflation that we've been seeing over the past month. There's a couple of things that could happen. First of all, the Fed could come out and they could say, yeah, it was just a blip. We knew this was going to happen. We're not going to change anything. And I really think if that happens, the markets are basically going to call BS. We're going to see continued rising of the 10-year bonds, and we're going to see the stock market go down. However, if the Fed comes out and they said, okay, you know what, inflation is a little bit higher, we're going to cut back on some of our quantitative easing a little bit, we're going to cut back on some of the bond buying a little bit, I think that would be more in line and within expectations of what people think the Fed will do. And then the other big question is, are they going to raise interest rates prior to their 2023 timeline? If they come out and say, yeah, we're going to raise interest rates a little bit sooner, that obviously is going to be downward pressure on high growth stocks. It's also going to be good for banking stocks. And so we're going to have to wait and kind of see what happens with that. So that's a little bit later in the month. That's around mid-June. So we have the jobs employment numbers this week, and then in about 2 weeks, we got the Fed meeting. Okay, let's talk about high growth stocks real fast. So the high growth stocks last week, they've really, really rebounded. But we get a little bit of a fight going on here. It looks like a lot of money that had been sitting on the sidelines is starting to get dumped back into high growth stocks, which is why a lot of them went up. However, I went and looked, and I also noticed that short sellers loaded up on these speculative growth stocks over the past week. In fact, in a lot of cases, they've literally used up every single available share that was available to borrow. And so they have absolutely loaded up. And it's not just AMC and GME. I mean, it's high growth stocks across the board. I saw all of them. Short sellers loaded up. Now, these stocks went up. So here's what I think is going to happen this week. I think we're going to see a lot of market manipulation pushing these high growth stocks back down. The short sellers have dumped millions, in some cases billions of dollars into these. They are not going to let these just run up and get squeezed. They're going to do everything they can to push them down. We're going to see short seller hit pieces come out. We're going to see all kinds of negative news come out. We're going to see just a ton of crazy things happening over the course of this next week or two as short sellers really, really try hard to push these stocks down so that they can make money. So basically, I'm just trying to say be careful with high growth stocks right now. Don't dump a ton of money into them because these short sellers are going to try to push them back down. The final thing I want to talk about is just the correction overall. There's a lot of analysts thinks that we got 4 to 6% down. Now we're going to start going back up. I personally believe that we are still in a correction and that we are going to see continued downward movement throughout the month of June and then rebounding in July. But I could be wrong. I could be crazy. I don't know. We'll see what happens. So in summary, overall, the news that's coming out is still quite bad. The only good news we really have is that pandemic cases have continued to drop, but all of the other news is down. The interest rates continue to look like they might start going back up. The inflation continues to run extremely hot. Jobs are bad. So we're going to have to see what happens. I really think we're still in a correction here. So just be patient a little while longer. Things should start to rebound in July. I think July is going to be a great month for stocks. We just got to get through one more month of correction before we start going back up. All right, guys, that's pretty much all I got. I also wanted to let you guys know that I will be releasing my stock pick, my sponsored video, here in a couple of days. One thing about it, though, is that it is an OTC stock. It's not NASDAQ listed yet. And so you won't be able to trade it on a Webull. So for OTC stocks, I recommend Interactive Brokers. You could do TD Ameritrade or Charles Schwab or Fidelity or any of the others as well. But Interactive Brokers is available worldwide. It's not only for U.S. residents like a lot of these others are. And with Interactive Brokers, I think it's only like $1 to trade penny stocks unless you're buying massive quantities, then it's a percentage. But for $1, it's well worth it. And so if you guys don't have an account with Interactive Brokers already, I do recommend you open accounts with multiple brokers. I mean, personally, I've got TD Ameritrade and SoFi and Interactive Brokers, Webull, of course. And so I recommend that you open an account with Interactive Brokers so you could do the OTC stock trading. And I have a link for that down in the description below with a promotion to get up to $1,000 in free stock. Now, unlike Webull, where it's a lottery or you might get $10, you might get $2,000, you just never know. On Interactive Brokers, it's a tiered system based upon how much you deposit. And so you'll know exactly how much free stock you're getting before you even deposit. And so I think it's a great way to trade, and you guys might want to jump into that. I will be buying and investing in the stock that I'm going to talk about as far as the sponsored video. Like I said, I turned down dozens of different stocks to talk about because I didn't like them. I only agreed to this one because I really like the company, I really like the growth, and I will be investing in it. However, I'm not going to invest right now because I don't want to give any sort of signs or thoughts of some sort of pump and dump or anything like that. I am waiting until I release the video to invest. That way, we all invest together. We can all profit day and night together. And so that's the key. I'm not here to screw you guys over. I'm here to make money with you, and I'm here to help you. And that is what I'm going to be doing. So the stock picks will be coming out Tuesday morning, and then shortly thereafter, I will have that sponsored video up with my stock pick that I will also be investing in. I hope you guys have a lot of success trading, and I will see you guys Tuesday morning.